Okay, Diego, how are you? I hope you are enjoying your trip uh, down in Brazil. I'm sure you'd rather be home, but it is what it is. So, what I just wanted to do in this video is go over, again, this is a follow-up to a video I did last week in regards to what we could do using some of my strategies, especially drill down into a shorter time frame. Using my intraday algorithms. So, if you remember, one of the stocks I went over was Netflix. As far as look to go short, setting up for a potential a down move. This right here is Netflix on the daily. This is when I basically alerted to that. It was alerted to that situation of watch Netflix. Basically, in here, as these somewhere in here, probably on this day, I got alerted to, hey, Netflix is nice and tight. Little time frame here, on a daily. Obviously, they had a bearish earnings and had a nice move up, but it kind of stalled out in here. So now I'm looking for a move below these levels here. Was sort of my trigger for a potential down move, and I got it on my scan, and again the setup was not only because it's the volatility contraction, but and it having the bearish earnings report, and not being able to get any sort of higher than this at this point, because who knows at this point. I'm like, okay, it could break up and continue higher. So it wasn't like I had a crystal ball saying, hey, I want to go short this, but I want to get short it if it breaks this level. So that would confirm to me, that's the market confirming to me the bearish thesis in this stock when it breaks below here. And the key here is always using basically intermarket analysis, and I'm analyzing it versus the overall market at this time. And some things that will, basically I got alerted to it, but there's some other reasons. Volume is decreasing, telling me that not only the volatility is contracting, so is volume. At some point, a volume will come back into this, and it would more likely move it one way or the other. So again, I was also watching it potentially for a move higher. If we had another day here or went sideways, I would have probably then focused on maybe an up move here. But the other key here is the relative strength. And it was, it's been, for the most part, obviously a big negative here, had some positive relative strength, and then it's been cycling back and forth, but then it was going slightly negative at this point on this day. I had relative strength sell signal in here, and again, long story short, it was something that I was on my radar, and what I did is then I set up the intraday, my intraday algorithm. And again, if we look at let's look at the S&P 500 at this juncture, and as you can tell, we've had an amazing run here. And if I'm looking comparing the S&P 500 to Netflix here, especially on the 18th of if you look at the 18th of November, which is this day here, where Netflix just kind of real small inside day, and then we look here, the S&P had a nice up move on the 18th. So the Nasdaq and S&P rallied to new highs, very strong day there, and Netflix can't get actually closes down. So that again, short term here, we're leaning relatively weak. So I set up, basically at that point, I had the ability to set up my intraday algorithm. I go into my, my thing here, and I'm going to back it up, just so don't steal all the thunder. I'm going to back it up. This is the 18th right here. All these bars. This is an intraday chart. I right-click here. I go to Format Strategies. I got my strategy already in here. I load up my levels. These are all my, I have a lot of variables, just a few that I really looking to change. Here's the price that the trigger price. I'll put the number of shares. Again, that's dependent on, before I get there, I know I talked to you about how I come to that. So each stock has a different number of shares, depends on the account size, and also the volatility of the volatility and liquidity of the stock, which will give me, I'll come up with the number of shares here. I also have a hey, if things are going wrong, this is my exit level. In real time, it is monitored. I have rules in here that will actually make that a lot better. But this price here is like, no kidding. I definitely probably don't want to be involved in this stock on the short side. If it gets above a certain price, I put that price in there. And then basically what I do is I click OK, and then I can go in here. Again, I have an account. I'll automate it to an account. And if this would be a managed account, it could be a client's account. It could be like, hey, this is a client 172, yada yada. I'm going to automate this strategy for this client's account, and then I can go in here and just basically then I'm going to click OK, and then it'll load up for me. Take a few seconds. This will take a little bit more than a few seconds because really the trade's already taken place, and now it's loading all the historical data on it. And there it is. So, and that's what I did on that day. So I set it up. It actually opened up higher. I wasn't really following Netflix. It looked like it wanted to break higher. It had a nice higher move. I wasn't even watching it. Right now the algorithm was running. I wasn't even really watching it too much. If I was watching it a little bit closer, if I was doing this for a full-time job or doing it full-time, the level initial level I would have looked for is the prior day's close, which is right here, and the price was like 381. I might have even said, hey, 380 is the price that if this thing starts out positive and actually breaks below 380, I probably want to put out a feeler short at the very least. Didn't do it. Market did plus through 380 with that, just kept going. And then what ended up happening is I got alerted to the fact that Netflix is in a bad shape. Well, actually, when I get I get the automated fill that hey, I'm short Netflix way down in here, which you look at that and that's a tough place to be selling something, and it actually did bounce for one bar, but then it continued lower. The algorithm then also has a pyramid feature in here, so it pyramided the move, and look at the the rest. That was a pretty that by the end of the day, which is right here, this is the end of the day, it just got clobbered, right? Great one-day trade, but what I do now is I allow this thing to run. And if we go back out to the daily, we basically go one day out. There you go, boom, took out the level, closed on the lows, and now I'm basically going to let this thing continue to run, and then it opens up the next day, kind of goes up a little bit, and then actually here's an interesting situation. So it has some trailing stop features, right? I know we talked about bulls making money, bears making money, pigs getting slaughtered. So, it wouldn't be the first time that you have a big one-day move like this. The stock kind of goes and then goes straight up and takes away all your profit if you didn't get out of it. So I do have some of these safety features in here, which actually covered this. Covers this stock at 366 and change. Boom, you're out of it. But again, I have a re-entry rule in this. Now I'm going to let it, lets it run. I'm not even doing anything. The algorithm continues, and if you see, look at that. Got you out at 360, and this thing goes all the way back. It's above 370. Pretty strong drawdown, which will be tough to take. You shorted here. You were in the money down here, and then this thing, just ramps up your ass again. And again, I've seen it where it just continues up and takes away all your profit. So that's why these, I've had this stuff coded through experience, and to be safe rather than sorry. But I do have a re-entry feature, and then if you notice what happens here, it re-enters, and actually re-enters at a much better price than where it got you out. It doesn't always happen this way. This is just the way it worked out for Netflix in this situation. So it actually gets short again at the roughly 370 area. And then what happens, this thing just gets weak again towards the end of the day and actually closes down pretty substantially from this new entry spot. The next day happens, and this is an interesting situation because the next day you come in and the market gaps up pretty high, much higher. The whole market, I think the S&P was up I don't know, 15 points or something, gapped up, which was really tough to take at being short. And as you can tell, it actually gapped up above our entry price, way above this price. So this is the point is you have a lot of volatility here. It's a shake and bake type market. But my algorithm is it's not perfect, but it will it's always mitigating the risks. And what actually happens here, because it gapped up and continued and just collapsed right off the open, is it actually pyramided. So we're short initial position. It shorted some more as this thing tanked down, went below 370. It shorted some more, and if you see, it held in there for a bar or so, and then it went back down again. And what did it do? It pyramided again. So now you have basically three positions that this algorithm basically put us in. So it leveraged us into this move, and as you see, Netflix just got weaker and weaker throughout the day, and again closed on the dead lows. So again, we're sitting in a nice, a beautiful position, short position. Next day, and again at this point, when I love to see this, when the market gaps up and then just collapses, it's just like, hey, you know what, this is a good trade because it had its chance here to really squeeze the shorts, and what happened? It just got crushed. Next day it opens again, and then it starts moving lower. Actually, and then in this case again, it moved lower quite substantially, and then it reversed really harsh, harsh again. And this is what happens, especially in the short trades. And then again, we basically got squeezed out of the trade, but at least we got squeezed out at a profit. Now, obviously, it'd be nice to have bought it back down here, but in this case, it just didn't work out that way as far as the way the rules are written. So, boom, squeezed you out. You're out of your position. But then it, again, has a re-entry feature, especially when you have a winning trade. It's going to put it right back on again. Now, in this case, we actually sell it lower than where we got out, as opposed to here, where we actually sold it higher. And again, that's usually the case. And again, I have no problem selling something lower or buying something back higher, as long as it continues to go in your direction. In this case, the market didn't have as kind of meandered, but at the end of the day, it closed below where we reshorted it, and then the next day came in, gapped much lower. I forget if there was news that came out or whatever, but it gapped way lower, came in. At this point, we have some profit levels that 355 I think was my target price, somewhere in here. So now what it does is tightens it up a little bit. It looks for volume, and it looks for a reversal. And then what happens? It covers half the position down in here, just on this reversal. It just covers half, and then as you see, market actually went lower, but then came back and again reversed much higher again, and covered another 25% of the position right up in here. And then on the next day came in strong again, took out this level and got you out of the entire position up in here. But it took its profits pretty close to the lows down in here, and like I said, not a bad, pretty good trade. And you may be scratching your head, why you tried it in now? You should just stayed short this thing. Like I said, in an ideal situation, sure, the easiest trade is a straight down, but I brought this, I wanted to show you this because, this is a very volatile move, even though it went lower. It's, as a trader, as an investor, it's all about the risk, right? And this is what we learned in school. It's about the, what's the volatility of the returns. That's an important feature to the returns. And in this case, this algorithm is what basically smooths out the returns. Because you're not going to have these vicious drawdowns or evaporation of gains. It's basically going to be always playing defense, but allowing you to take advantage of a big move as it happens. So hopefully this video is helpful. And again, this is a system that can be implemented. I implemented for myself. Here was an example of it. Can implement it for anyone. But the key is to be set up with a broker or someone who can basically have a feed to say a trade station or something like that. So anyway, that's enough of this video. Just wanted to show you this example, and have a good night.